What's up, traders? Welcome to this week's episode of the Weekly Watchlist, where I do a technical analysis and give you my thoughts on the tickers listed up above. We'll of course be checking in on our broad market. We've got our core list of companies here that we're always watching, and this week I've got 2 additional trade ideas to share with you towards the end of the video, so definitely stay tuned for that. Tough weekend up here in New England, of course, with the blizzard. That is why the video is coming out late, so my sympathies go out to anyone else who had to do some snow shoveling this weekend. Regardless, the driveway is clean, we're inside, we're warm, we're looking at charts, everything is all good. I would point out quickly that anything we are associated with is linked down below in the description, and without further ado, let's jump right into the analysis. So kicking things off on the SPY weekly time frame, looking at candle structure and location as always, you can certainly see that we have a bullish hammer candle, right? And it would generally indicate that there's potential, not guarantee, but potential for some sort of reversal. So obviously the sellers tried to make a move lower. The buyers responded in an overwhelming fashion, taking it not only to the opening print here, but through the opening print, closing green on the week and also up closer to the highs. Sure, there's a little bit of an upper wick here, but it's not really significant enough where you would say, oh wow, the sellers really responded and tried to fight and push prices back lower. It's just simply not the case. So structurally speaking, bulls definitely get this one. If we tie this in with location, this is where we learn a little bit more, right? If I do something like this, not bad for a freehand horizontal line, you'll notice that we are above weekly horizontal support, right? Sure, there's a little bit of exploration underneath it, but it's not like the candle body is underneath. We certainly did not close anywhere near it. So structurally speaking, I would put that as a feather in the cap for the bulls as well. However, please don't get overly bullish, right? There are some things that are bearish about location, obviously, as well. If I do something like this, we are still underneath the low end of that prior weekly range from way up here. There's certainly the potential that we do something like this, right? We come up higher, we retest, all of this is overhead supply. If they're gonna sell, maybe they sell for a break even here, we get a lower high on the weekly, and we roll over. It is still a possibility. Please don't write that off as something that can't happen, okay? So that's what I've got in terms of structure and location. The last thing I would point out, of course, is our weekly trend line, right? We've been talking about this guy forever, and it's broken, right? It still is broken. The hammer candle did not recapture it, so it's not like we had a quick fake out and now we're back above. Simply not the case. But I just wouldn't be overly bearish with this structure that's unfolding right in front of our eyes. I would wait for a little bit more confirmation from the weekly that yes, we are going to get a lower high here before being outright bearish, right? There is the possibility that the market just kind of plays ping pong and we get a sideways 2022. It's not off the table. So that's what I've got from the weekly perspective. Let's drill down now and talk about the daily and some tradable levels into the upcoming week. I would point out that they gave us a pretty solid setup here. We have almost 5, not quite 5 with the lower wick from Monday, but almost 5 days of perfect back-to-back balance, and they closed it, most importantly, inside of the balance. It's not like they gave us a little bit of a close outside, so then it becomes tricky, right? Do you take it long? Is it technically the breakout? Is it going to fail back inside? It's not the case. We have a clear area where we can get involved to the long side, and it's just the top end of the range here at 443.50. If we take that out, if we recapture the daily 200 SMA, I would say it's all about that weekly structural area we pointed out there, close to roughly 450. That is an all eyes on level, noting that it could lead to a lower high. We also can't write off the fact that there are some other possibilities for areas of balance, right? It's not only going to lead to a breakout. We could get a look above and fail. If we close back down underneath 443.50, the target should be the bottom end of the balance area. That would take us to the 4-day lows, which are stacked as a flush point, I might add, at 428.50. If that breaks, it's all about Monday's low, and then we would reassess the weekly time frame and how that particularly closes. So that is the downside and potential for a reversal. Let's say it blasts right up through 450. Where's the next major area? Up here at 460 quarter. I would also imagine the daily 50 SMA starts sloping down and may meet us there for a super resistance. These are not guarantees that we go to any of these levels, but I'm just talking about the potential for breakouts of this range, right? It's got to be a number of things. It's either going to be a breakout or a breakdown, or we just go sideways and the market is extremely choppy, right? Direction in here is not going to be abundantly clear. It's got to be day trades only, larger larger moves will only be produced up and over these highs or down and underneath these lows. If we do get the sideways option, I would start thinking about that as more bearish price acceptance down here and building the case for a bear flag on the daily to pan out to the downside. The last thing we'll do here on the daily time frame for the SPY at least is come in with the fibs from the lower high, okay? That's important because we'll do the same thing with the QQQ and the IWM. If I do something like this, notice that the 38.2 is right here, and we did technically close a bar above it, but as you know, we always opt for structure. We don't blindly follow the fibs. I would say that 443.50 is a much more important area than just going blindly off the 38.2. I'm just sort of giving you the sense, right, that, you know, we're here, right? We're at the 200 SMA, we're at this breakout point. If all of this resistance starts to go, it could certainly lead to higher, even though that weekly trend line has been broken. It's not like the market has to go to zero. It's not like it's all out bearish. There is possibility for neutral still. We're just not as bullish as we used to be, right? So that's what I've got for you on the SPY weekly and daily, right? Time frame charts. Let's move along and talk about the QQQ, which of course is more tech oriented, and it's been showing relative weakness, right? We know that shouldn't come as a surprise. Many of the same scenarios that we discussed in the SPY will be available here in the QQQ. There's your area of 4 or 5 day balance, depending on how you want to classify Monday's wick. It's either got to be up and over the highs. We know that there's a sort of a sneaky area of resistance around 361.64. Let me show you that on a 30-minute time frame. Zooming in here, it's right here, right? So clear rejection of that attempt to go lower, and then that's where things kind of fall apart and we enter this 4-day balance. That to me is going to be a critical overhead area of resistance. Notice also we did not close a 30-minute bar above 354 roughly, we'll call it just for round number's sake. You can see here, it's just an upper wick. So a 30-minute bar that closes above, maybe that starts to break things out. I would not wait for the daily cross above that high right there, closer to 357.50, okay? So back on to the daily so we can talk more about scenarios. We still have the possibility for a look above and fail. If that happens, the 4-day lows are in play at 341.82. If that goes, you could even start to round that down a little bit, 341.50. If that area goes, Monday's low is the must-hold area. If it doesn't happen, then obviously things can get much more nasty inside of our marketplace here. Underneath us, we have 324 roughly as the next target. Then we would reevaluate, right? That would also be sort of a move out of the bear flag, right? So that's a possibility there. The reason we're talking more bearish in the QQQ is, of course, if we think about relative strength, relative weakness, where are we in relationship to the 200 SMA? Much further underneath, right? I can also do something like this and just say, okay, here's your all-time high. There's already a lower high. Here's a secondary lower high, whereas in the S&Ps, we did not have that. If I take out the Fibonacci's from the lower high to the low here, notice that we have not closed the daily bar above the 38.2. So that's why I'm a little bit more skeptical about the QQQ. It's got a little bit more work to do before we're even on the same page as the SPY, but those are all the levels and sort of thoughts I have going on in my head right now. To the upside after that, the equivalent too of the 450 recapture in the SPY, that's way up here, right? So again, another indication of relative weakness. That number, by the way, is 378.50 for any of you guys watching on mobile. So QQQ, yeah, it does look like it could break out of this, 4-day balance, 5-day balance, but a little bit more relative weakness. That's all I'm getting at here in the Qs. Let's move along and talk about the IWM, last one, of course, and we're going to go out to the weekly, just so I can illustrate that we were in this big area of balance, we're breaking down out of it, and even more relative weakness here, noting that the weekly bar is an indecision doji. It's not like we closed inside of the prior week's range. We're closing the body outside. We did set a new lower low, a new lower high, and if we look left, there's very little structure in here until we get to the breakout point at 164.20. Now, it's not a call to say that the IWM has to do something like this. It's just saying that although the S&P is looking good and that maybe there's potential for a bottom here, the IWM and the QQQ are still showing some red flags and might say like, hey, take it easy, don't get ahead of yourself to the upside until we can firmly cement that most of the indexes are starting to turn around. IWM, certainly a laggard. Of course, the bottom end of the range is going to be that must capture area. That's 208. Let's go down to the daily and just discuss some more nuance here. You can certainly see that the Friday bar is nothing like what we've seen in the QQQ or the SPY. If we look at this, we have a new lower low, so Monday's low did not hold in the IWM, And also, we have a lower high. We're nowhere near the top end of the balance. It's just a much different picture in small caps. Please don't also discount the fact that many money managers out there have seen, right? Now we're kind of in 10% correction territory. This doesn't happen all too often. Maybe it's time that they start deploying some capital. It's not a guarantee to say that everyone's going to rush out there and buy everything. Of course, we know the market's been a little bit more difficult to navigate in 2022 with the Fed policy sort of accommodating higher interest rates, but it's just something to think about. Money managers need to do something, and if they need to put money to work, maybe this is enough of a correction for them to start to do something like that, and we see some more buying. We'll have to see, but these are the levels and ideas I've been thinking about in the broader marketplace. If you've made it to this point in the video, I'm sure you're enjoying the analysis. Hit the thumbs up button and subscribe to the channel so you know every single time a new video comes out. Kicking off our companies here with Apple, very, very interesting with the earnings announcement coming out post-market Thursday and giving us a solid rally on Friday. Notice a couple of critical things here. So there are no more sort of unknown catalysts hanging out there. There's nothing that's really complicating the chart anymore, which we've been discussing the past week or so. We have already broken out of the 4-day balance that the rest of the marketplace is still kind of hanging out in. We've also recaptured that big breakdown area on the Friday bar. We've also recaptured the daily 50 SMA. It's not to guarantee that Apple has to go ahead and shoot up back towards all-time highs, but it is starting to look like more of a important and significant turnaround here, as opposed to a possibility for a clear lower high. Now, yes, you could do something like this and say, okay, we're kind of right at that resistance trend line. Maybe we roll over here, but I would opt for the horizontal levels at this point and say, okay, if we fall underneath 168, maybe it's the lower high, we reassess. Really, it's got to be back down underneath 164 quarter, right? That's where the gap fill was. That's where the gap did fill on Friday from the gap up from earnings, and the buyers responded from. So to me, forget 168 actually. Maybe that's like your advanced heads up, like, okay, maybe it's more bearish, but it's only really a bearish trade if we take out that Friday sort of low and the top end of the range here. What would that give us, right? A look above and fail. Target should be the bottom end around 157. The chart would not suggest that as the candle has closed on Friday. Also a nice uptick in volume here. If the move is higher, it's all about the lower high that was set around 177.50. Intraday trades only as we're making our way through this range. If it just starts to chop around and go sideways, be nimble, be quick, in and out of trades. Don't overstay your welcome is what I would say inside of Apple. Next up, we have Netflix, and this one just got absolutely smoked as we know on earnings. Not a whole lot to discuss other than the fact that Bill Ackman's huge position, I believe it was 31 million shares, that's not dollars, 31 million shares were purchased, and the stock is still just kind of going sideways down here. It's going to be as simple as this in Netflix, in my estimation at least. It's got to be a move up and into the gap overhead or down and out underneath the consolidation lows. The range in here, it's large, don't get me wrong. That's a 20-point range that I just sort of scribbled through. But in terms of directional analysis and reading that, we've got nothing, right? We're hanging out in no man's land. So I would be patient, either up and over 408.66 or down and out underneath 357.15. Upside targets would be half gap here at 454.10, and the downside target we have is at 296.36. Let me scrunch up the chart and illustrate where that's coming from. I think we've got to go to a 2-year weekly and maybe we can see it. Yeah, there you go. So big pullback low before staging that rally from in there. That's Netflix in a nutshell. Back down to the daily, and let's continue and talk about Tesla, right? So big bad Tesla breaking back down underneath 1,000, right? So here it is, firmly underneath and accepting underneath, resisting on the, the Wednesday session here at the resistance trend line as well. We're also falling underneath that prior all-time high at 900. This is a fairly interesting chart. I'm just going to remove that quickly, noting that we're at 800, the prior breakout point that led to that ramp, and we did print a hammer candle on Friday. We're also printing that hammer off of the daily 200 SMA. So is there potential for a turnaround here? Yes, but what's going to be the line in the sand? Well, 900. Do we set another lower high off of that area, continuing the daily downtrend, something like that? Or do we recapture it and start to get back towards 1,000? That is the all eyeballs on number that I'm thinking about into the upcoming week if this hammer does result in some sort of rally here. Of course, it would be a break of the resistance trend line, and maybe we would readjust our tune. From there, I would not expect an immediate break of 1,000 into this prior congestion zone. I would definitely be watching for some sort of pullback off of that number. It's probably honestly going to be a pullback off of 900 too, so maybe it's something like that into the future. Just speculating here, just thinking about possibilities. The hammer candles got me thinking a little bit more bullish than bearish now that we've pulled back significantly and we're at all of these areas of support. If it does break down anything under Friday's low gets us to 765, and then roughly 725 in terms of nice round numbers. Next up, we have Alibaba. This one just sort of playing, yes, I would say it's fairly nicely, honestly, not violating any of these levels that we've had mapped out in a major way. Again, quite nicely, I would say. You can see a clean resistance there, clean support there, and then just kind of hanging out in this range here. So 2-day balance is in play, up and over the highs, roughly 115.85. Takes you into the high from, what was that, Tuesday. And you can see it was a prior area of structure as well. So it is respecting the technicals. It's just, not the most exciting thing to trade. So it is going to remain on the watch list for now. If it were to make the move higher, and again, there is a hammer on Friday, which is why we are discussing higher in the first place, the 50 SMA could coincide for super resistance around 122.80. That would be the first upside target. Anything after that 130 is the really, really important prior double bottom from the weekly time frame from like 3 or 5 years ago. So it's pretty historic level. That's going to be an area of importance if it continues past that. Any breakdowns of this big now, what could be triple bottom around 109.39, call it 109.40. We know that underneath us, we have roughly 100 psychological. And let me show you where it's coming from a structural standpoint as well. Going to have to grab lots of time here on Alibaba. Obviously, we haven't traded these levels in quite some time. That's coming from, it's still hardly on the screen. Let's grab more. Let's go with like 10 years. Let's see what we got. There we go. Okay, so your 100 is this area right there. Let me zoom in on that so you get the sense. Bull flag breakout point here, and then a little bit of resistance for a couple of weeks before supporting above it and then making the run in the past. Okay, so I know it's kind of a far-fetched level, but I like the psychological aspect of it as well, and just some of the prior structure. It's not perfect, but it is probably what I would pay attention to the downside here. Next up, we have Facebook. This one definitely building out more of the bear flag. Instead of making an equal high up here like we talked about in the SPY, it's clearly lower, right? It's in the 50% mark of this range here. So direction not abundantly clear. If we take out the 2-day highs from Thursday, Friday, it's a move to the top of the balance area. That's 309.50. From there, I would probably omit this 315.25. It's kind of like the sneaky area we saw in the QQQ. But if it wants to go higher, that's the big one to pay attention to here at 323.25, right? That you can see is the prior bottom end of this balance right here. I would imagine that all of this overhead supply, anyone who wants to get out for a roughly scratch or, just out of the position, maybe a small loss, that's the first place they're going to start thinking about selling as their positions come towards break even. Don't forget, they have not reported yet. Okay, so Facebook will be this week on the 2nd of February, which is Wednesday, okay, after the market close. So it's going to hang in limbo until that happens, in my estimation, right? So something like this, maybe, unless the broad marketplace is ripping, probably going to hang in limbo, and then on earnings, we'll see what direction it decides to go. To the downside, underneath Monday's low, because that's really the only place where you're going to get active to the downside. Let's go ahead and put that in there. There we go. So roughly 289.70. Next target underneath is 279. And let's see if that is going to come up on the chart. Yes, it will. It's your pullback low and prior resistance, which is off the screen. 279 structural element of support. Next up, we have NVDA. This one staging a little bit of it did bounce off the lows. It did make a new lower low underneath Thursday's low. But notice how it's above the 200 SMA, right? It's also at the midpoint of the range. So again, direction isn't abundantly clear here. If it's going to move higher, it's the top end of the 4 or 5 day balance in there. Roughly 240, right? Just for round numbers sake. We have some pretty nuanced levels up above. I would probably, again, omit this one for you longer term traders. Maybe it's important. I think I duplicated that. Apologies for that. We're going to remove this time. There we go. So up and over those highs, the top end of the balance in here, it's a move to there. Okay. And why is that the number? Well, that's where we supported equal lows. And that's where the breakdown really came from. 257.68. Anything after that, probably the resistance trend line over the course of time. Earnings further out in this one, not as much of a big deal. And again, only getting active to the short side underneath Monday/Friday's lows. You can see we did print a green hammer candle on both of those sessions, Monday and Friday. So that's why we're leaning towards the possibility for something like this, but it's short underneath that area, and a break of the daily support trend line to get us to roughly 195 is the next number to pay attention to, coming from support and of course support right here. Next up, we have Microsoft. This one was the fake out of them all. Originally looking like it was going to gap down on earnings, and then it turned around, right, and gapped up. Sure, it did fade that entire gap and it filled it. So structurally speaking, that's a healthy thing. But now we clearly have like 3-day highs in play. A little bit tough, a little bit tricky here. Sure, there's a day trade to be had, but there's significant resistance around 311. So a more patient trader, someone looking for a larger move, would definitely wait for this entire area to resolve, and then it's all about the 318, right? You can see prior breakdown point from right in there, also a lower high around that area. That's probably the larger trade to pay attention to. And then probably the 50 SMA comes in contact first, right, as that's downsloping. But the next structural element is roughly 330. To the downside, if it's going to roll over here, like let's say it gives us one of those look above and fail scenarios, something like this, we know the target's here at 293.50. Also the daily 200 SMA. It's also the gap fill area from the earnings gap up. That to me would be the must hold area. Otherwise, look at how far away Monday's low is, close to 275, right? That could be a fairly nasty move in Microsoft if it's a fake out operation to the upside. Last but not least, we have Amazon, the beast here, and they are reporting earnings this week. So be nimble for that. It looks like they're on the 3rd, which is going to be the Thursday after the market close. This one too, putting in a bear flag, but we're at the top end of the 5-day balance, right? If we can take out 2,900 roughly, look for the rotation here, 30.27, then the next one is up to 31.76. Again, I'm not saying that any of those levels will be in play, especially with earnings coming up here. I'm just saying if there's a lot of volatility, large ranges that are being traveled, those are some of the major numbers I would pay attention to the upside. To the downside, right? Let's search for a downside target here underneath Monday's low, which is 27.07. You can see that in the bubble. We do have a horizontal structure at 26.67. I'm just going to back it out to a weekly here and just remind you, right? This is more similar to the IWM. Look at this range. We're breaking down firmly out of it. Could this just be a back test before rolling over? Maybe. If that's the case, it's got to break that structural level we just discussed, 26.67, and then we have some room to fall to this prior bull flag top end, right? There around 24.66. Also the weekly 200 SMA. Again, with earnings coming up, I'm not saying that any of these levels will be hit, but it's nice to know where they're at if we get a massive gap in one direction or another. Again, usually a 50-50 coin toss on what direction something will go. And with theta as well as implied volatility working against you, wouldn't really recommend trying to hold short-term options through earnings announcements. So that's our companies in a nutshell. Hopefully that was useful. Let's move into these two trade ideas. Quick reminder to hit the thumbs up button, hit the subscribe button, the bell button, all of the buttons YouTube tells us to tell you guys about. And let's get right into the first one on Pfizer. PFE is the ticker. Earnings are a little bit further out, not something that we have to worry about into this upcoming week. What I'm liking about this is the fact that it staged more of a rally as opposed to going sideways over the last week, right? We're also sitting right underneath the daily 50 SMA and right at the resistance trend line. So there's two things that can occur here. Obviously, if the broader marketplace starts taking off to the upside, I would look for a breakout to take us to that next area of resistance, which horizontally speaking is roughly 57.25. That would also, it's a break of two things at once, right? 50 SMA and resistance trend line. So I would say that that could certainly be the case. However, being up 1, 2, 3, 4 days in a row, maybe it's a higher low pullback first, break the resistance trend line sideways through time, then it's a breakout like this, right? So that's one possibility here in Pfizer. The other one is the short opportunity. And if the marketplace rolls over off the top end of the daily range, then I would watch for something like this. Monday's low could be in store, keeping intact this short-term daily downtrend. Again, with a move to the resistance trend line here, stop easily just goes right over the highs, and then you're looking for a short like that, right? So tight risk here. If you're going to play to the short side, you need to respect it. If you're someone who's been burnt on not stopping out of volatile plays in the past, that's probably not the trade that you want to be looking for, especially fighting this little rally, this little relative strength there. Again, just wouldn't strike me as something you should look for if you've been not too disciplined with your stops in the past. You can see this is all stemming from a hammer candle in the past, Monday's session right off of a horizontal area of support, roughly 51. So, it could go either way, to be quite frank with you, and I would really look to the broader marketplace for more of a directional indication. The next one is going to be on Twitter. Twitter also has earnings a little bit further out, not this upcoming week, so we don't have to worry about it. But look at how beautiful the area of balance is, right? Let me just do something like this and make this a little bit easier on the eyes. So, the candles are literally lining up perfectly. The highs are all intact and the lows are all intact as well. Even Monday's open is dead on the lows, close to 33.65. So it's quite simply range rules in place. Either we break out and we double it, probably taking us to there. We're going to go ahead and pop that level on. We're going to pop on the low in here as well. And here you go, right? There's your level. If you double the range, there you go. There's the upside at 37.11. If you double it to the downside, there you go. There's your low from Monday at 32.05. You also have possibilities for look above and fail, right? Something like that. Target would be the low end of the range. And you also have the possibility for a look below and fail. Obviously, the target would be the top end of the range. However, given Friday's green close, we're going to opt for and start thinking about breakouts to the upside first. That's what I've got for you in terms of our two trade ideas. The market's kind of in a sticky spot right now. Some things are looking like they want to continue lower. Other things looking like, hey, maybe they're trying to form a bit of a bottom. It's not abundantly clear. It's a little bit wishy-washy out there. So that's why we've only got two trade ideas in today's video. Hopefully they were worthwhile for you and you can watch them into this upcoming week. If you enjoyed the video today or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel, secondary channel. I always do that. Our secondary channel is linked down below in the description where we do 10 to 12 video ideas every single day. That's not week, every single day. And with all of that being said, I wish you a green trading week.